Lines now with Stephen Carroll. Hi, Stephen.
Hello, Catherine.
Starting off in Beijing, we've been talking about the Chinese Parliament session that's opening up and the economy, a big topic for discussion.
Yes, the Chinese government uses the National People's Congress to lay out some of its economic goals for the coming year. They've said that they're targeting a growth rate of about 7.5% in 2014. That's the same forecast we had for last year, but is actually less than how much the economy grew by. It grew by 7.7% last year. But there's been many recent economic surveys showing a potential slowdown in certain sectors of the Chinese economy, which may prompt the government into making more stimulus. Kate Moody has more.
A modest growth target for the world's second largest economy. Chinese officials said they expected growth to remain around 7.5% in 2014. That's the same as last year's target and slightly lower than the 7.7% actual growth rate in 2013.
This target is in keeping with our goal of finishing to build a moderately prosperous society in all respects. It will boost market confidence and promote economic structural adjustments.
China's growth used to consistently outstrip official targets as the government maintained a tight grip on the economy. But the last 5 years have seen a slowdown in the once blistering economic growth as the Communist Party turns its attention to reforms. That includes allowing the Chinese currency, the yuan, to float more freely on the markets and making the country more business-friendly for foreign firms. Officials also hope to continue the shift from an export-driven economy to one based more on domestic demand. But analysts warn that as the government tries to reduce its public capital spending, the private sector may not be strong enough to keep the economy on track. Recent manufacturing data indicates factory activity is slowing down. If that continues, overall growth could weaken and shrink below the 7.5% target.
Okay, so Stephen, tell us how all that news has affected the markets.
Well, both Shanghai and the Hong Kong Hang Seng Index are in the red in trading today. Investors not terribly impressed what they're hearing from the Chinese National Congress. There's also some worries over a potential corporate bond default in China that sent those shares into the red. Japan leading the gains. The Nikkei, you can see they're up over 1%. This as fears of an imminent Russian military intervention in Ukraine subsided yesterday. That also sent some of the Wall Street indices to record highs. Just a quick check-in on the markets in Russia as well. We've been talking about them in recent days. Given the news there, the MISEX index in Moscow down almost 1%. In trading today. We had seen it earn back some of those massive losses that were registered on Monday, but the index slipping back into the red again today.
Okay, well, that leads us quite neatly back to news linked to the crisis in Ukraine, the threat of economic sanctions against Russia. A few more details on what that might actually mean.
John Kerry had spoken about potential visa bans and asset freezes being used as measures to try to discourage Russia from intervening militarily in Ukraine. We're now told that Russian banks may also form part of the plan. These would be measures similar to those imposed by the United States on Iran, effectively cutting those lenders off from the US financial system, which is, of course, a key part of the global financial network. But there is still, of course, significant resistance to those sort of sanctions from Europe, and the US is unlikely to act alone, we're told, without that consensus view.
And another story linked to the crisis in Ukraine, news about a gas discount for Ukraine that's going to be ending.
Yeah, and this could have a potentially huge effect on the Ukrainian economy. The Russian state-owned gas company Gazprom saying that it would raise the price it's charging Ukraine for gas from April. Vladimir Putin had announced as part of an aid package to Ukraine back in December that the price of gas per 1,000 cubic metres, the unit of gas, would come down dramatically from $400 to around $280. It's going to go back up, though, in April. This as Gazprom says that Ukraine owes it more than $1.5 billion in debt for unpaid gas bills. The EU, though, has promised to intervene to help pay that debt.
Okay, and some other companies' news from around Europe.
Yeah, we're going to start with the world's second largest retailer, Carrefour, which has seen its profits boosted by increased sales in France. The company has reported net profits of almost 1.3 billion euros for 2013, up slightly on the previous year. Like-for-like operating profits at Carrefour's French stores were up by 30%. And Adidas has warned that currency fluctuations will hurt its earnings in 2014. The sportswear brand announced lower than expected operating profits of 45 million euros for last year. That translated into a net loss of 10 million euros for the firm.
Okay. Okay, now yesterday you were telling us about the world's most expensive cities to live in, and apparently things could be about to get much worse for people in London.
Yes, London wasn't in that top 10 from that survey of the Economist Intelligence Unit, but according to one of the biggest investors in London's property market, the average price of a flat in coveted areas of the city could rise as high as £36 million or 43 million euros by 2050. This is based on the average price of property in these areas around Hyde Park in London. I'm sure somewhere you know very well, Catherine.
Always there.
Being about 1.8 million euros at the moment. It says at current inflation rates that they've seen over the past 4 decades, that could rise to that incredible price tag of 43 million by 2050. The good news, I suppose, is they are only focusing on those prime areas. Perhaps there may be some other places that you and I could invest in the future, Kat.
Probably above a chip shop, though, wouldn't it? Thanks very much for that slightly depressing news. Stephen Carroll with the business news here on France 24. We're going to move on to taking a look at the stories that are making waves on the internet in web news.
The world watches.